Have you ever wondered how central bankers decide where to set interest rates? The Taylor Rule is a key framework in monetary economics. It provides a formula for estimating how central banks should set short-term nominal interest rates in response to inflation and economic growth. The formula is the nominal target short-term interest rate equals the neutral real short-term interest rate plus expected inflation plus half of the difference between expected gross domestic product and the GDP trend plus half the difference between expected inflation and the inflation target. On the screen, R neutral is the neutral real rate, I expected is expected inflation, I target is the inflation target, GDP expected is expected growth, and GDP trend is the long-term potential growth. Let's apply this to an example. Assume a neutral rate of 1%, expected inflation of 1.7%, a 2% inflation target consistent with the Bank of Canada and the Federal Reserve, expected GDP growth of 0.8%, and a GDP trend of 2%. Plugging into the formula gives a target rate of 1.95%. If the actual central bank overnight rate is 2.75%, the actual rate is higher than the rules-based rate and would suggest a rate decrease. If the central bank rate were 1.75%, the rules-based rate suggested by the Taylor Rule would be slightly higher and may or may not be enough for a rate increase. Actual rate differences reflect policy judgment. Central banks weigh inflation uncertainty, revisions to GDP, economic sentiment, and assumptions about the neutral rate. The Federal Reserve and Bank of Canada often operate near rules-based levels, but adjust for credibility, inflation expectations, and employment dynamics. The takeaway is that the Taylor Rule offers a clear, structured benchmark. It helps explain central bank decisions while reminding us that judgment and forward guidance ultimately shape real-world outcomes. For more on economics, investing, and cross-border wealth management, visit our blog at 49thparallelwealthmanagement.com or check out my new book, Crossing the 49th Parallel, a retirement planning guide for moving across the Canada-US border. From the desert to the tundra, we are your cross-border retirement planning experts.